Hey guys, Steve here from theturtlefollower.com with the strategy session for Thursday, October 2nd. Sorry I'm getting this out a little bit late, but we had a couple things going on with the family, so this is the quickest I could get to it. As far as the market goes today, we basically have, in my opinion, a very critical point of influence here. The market has sold off, as you can see, for I think it's 10 of the last 12 days. 10 or 8 of the last 10. Okay, 8 of the last 10 days have been down. Today, what happened is this could signal a reversal here. All right, this long tail on this candle. So essentially what happened is we opened at 1940. We went as low as 1918. And then we ended up closing at 1938. So basically what happened is when you get these long tails, there's exhaustion between either the bears or the bulls. So in this case, the bears pushed it down, and they basically pressed their luck. And sure enough, the bears pushed the market down in the morning. The bulls turned around and bought it right back up and overpowered the bears this morning. And sure enough, we ended up closing pretty much unchanged. I would think we were down 2 points, and that was really in the last 20 minutes. For the most part, it was trading right around unchanged for most of the afternoon. So as you can see, we are still under this downtrend line. This is still very much in play. So now it's a big critical area here, because you could see that we are looking at these trend lines coming into play. If we use the exact lows of the trend lines, you can see that we have a lot of support right in this area. All right, so those two trend lines come into play. So what we would have to see if we were going to get a reversal would be obviously a move above today's high, which would be 1945, and a close above this downtrend line. That would be the first sign we would want to see. And then eventually we would want to see the 50-day and the 20-day retaken, and then eventually, hopefully not too far down the line, but this is assuming everything goes well, we'd want to see a breakout over 2006. But for right now, again, I think this is a critical point in the market. I think if we break down below 1917, we're very much going to 1900, and then hopefully either that holds or it doesn't. But what I'm looking at here is the potential for a larger head and shoulders pattern, meaning that we would have a reversal. So here would be the left shoulder. The box here would be the head, come down, put in a lower high somewhere in this area, and then that would be off to the races as far as we would need a breakdown below 1900, and then we would say that the market and the trend has changed, and we are no longer either moving sideways or higher. We are actually moving down. But again, those are just two different scenarios that can play out. For right now, we're assuming that we're still in an uptrend. Okay, we're still holding this line. You can see here on the weekly chart, we are very much holding these lows coming through here. Okay, if you looked at it there, but we are doing so barely. All right, so we definitely need to see a bounce from here if we were going to remain thinking that the trend is to the upside. We did enter or exit RSG this morning. Okay, Republic Services Group. This one broke down below our stops yesterday. We were potentially looking to move our stop up to this 38.52 if we had the bounce. That would be using the low from 9.29. That didn't happen. Instead, we had a big sell-off yesterday with volume. Came down, closed below 38.10, and we exited today at the open. Okay, so that one is no longer a position. We'll continue to track it, and we will basically set an alert for a move over. We'll actually set it right now. A move over 39.58, which would signal that this is a potential low. Move above there could trigger another entry. So with that exit, we're left with 6 positions. I think this is probably the lowest since I started the portfolio. But All in all, these are supposed to be the strongest of the 12 or 13 that we were in. So Apple, you could see holding the $98 level, bounced off of that today, and again closed above the 50-day moving average. Very strong. This trend line we can actually remove because it's no longer valid. I don't know which trend line is actually in play at this point. It could very well be a trend line from this gap coming through here. So right now, again, a break under 98 would trigger an exit in Apple. ADM up 0.26%. You can see that we are putting in some sideways action right here above this $50 level. All right, so the longer we move sideways here, the 50-day moves higher, and hopefully then we can get a breakout over 51.44 and eventually a breakout over 52. Again, on the weekly chart, it looks very good. Disney down 0.8. All right, so now Disney is one that technically triggered an exit. All right, we're using this 87.28, all right, as our stop level. Technically, Disney did trigger an exit. What I am going to do, and I'm only doing this because of how we reversed and how Disney reversed from this long tail. To me, it looks like Disney touched this support level and bounced off of it. It was bought. The fact that it didn't close back above 87.28 at this point, in my opinion, since it did close very close to it, I am going to keep the position on and give it another day. If, for argument's sake, Disney closes down a little bit more tomorrow, then we will exit the trade, no doubt about it. I think what may happen here is we may have flushed out the sellers, and now we may get some buyers coming in for Disney. Again, if you look at it on a longer term, let's use the weekly. If you look at it on the longer term and actually use, the lows, okay, you could see what we did. The last time it came down and touched this trend line, we've rallied higher and higher. All right, so I just want to make sure that we're definitely exiting at the right position. Again, I'm giving it a 1 day's grace. If it doesn't move higher tomorrow, we will exit on Monday. Expedia down 1.6. This one continues to trade in its range that it has been in for approximately a month now. Okay, just moving sideways. Tested the 82.50, bounced off of that. So now we want to go back and see if we can break out over 88.30. Again, trend is higher on the weekly chart. GD, again, another one, in my opinion, we're giving a 1 day's grace to. And it's not because I don't want to sell the stocks. Trust me, I would sell them in a heartbeat. They don't mean anything. They're just pieces of paper. But I look at this, and I look at the last time it touched this 20-week moving average and what it did from there on. So I want to just make sure that we're not getting out at the lows. Again, if you look at the trend on the daily, depending on which way you draw it, you know, if you come up to this trend line, or say we come to here, we're still technically above the trend line. So I want to make sure that our close below 122.50 is accurate and is actually breaking the trend. Again, we'll give it a 1 day grace and see what happens. Last one, LUV, came right into the 50-day moving average, which would have been our stop level anyway, and bounced. So still have that downtrend intact. We want to see the breaks of this downtrend and go from there. Now, one position I'm really looking at, and I want to show you something that I was looking at today. Home Depot. Now, Home Depot, you could see here, has moved sideways, broke out, and I think we're getting close to a breakout. All right, I'm waiting for a break over 93.50, and then we would probably set our stop here at 88.50. Now, I'm going to change the weekly chart, and I want to show you one other thing. All right, so this on the weekly chart now is called a linear regression channel. All right, this is something I was on Twitter, somebody mentioned it, and I took a look at it, and it's actually quite an interesting study. It's in Thinkorswim, and basically what it is this dashed line in the middle is the average price over whatever the time period is. So over the last 3 years, whatever we have it set for. I forget exactly what it's set for. Anyway, I'll have to look for that. So essentially what this is this is the average, and then these lighter color lines are the first standard deviation, meaning that I think it's about 65% of all price action happens in there. And the outer lines, or the heavier lines, are the second standard deviation, which means 95% of the price action. So if your eyes are glazing over, don't worry about it. The basic idea is it contains price. All right, so the intention is that this channel will contain price. So what happened with Home Depot is actually after its move higher, right? It was trending higher. Got to the top of the channel, which contains price, right? Then instead of pulling back, it moved sideways. Now remember what I said when I said I've seen these patterns before. Obviously I wasn't looking at the linear regression channel, but I've seen these patterns before, and they can offer very explosive upside moves. So I was looking at a couple other positions that I've been in. Alcoa. It moved to the top of its channel and went sideways. Look at what happened when it broke out. Okay, it went from 8 to 17. Now obviously I wasn't in it from 8 to 17, but it happened. There was another one. Let me think. Marriott. Okay, it moved from its left side to its right side. And essentially what it says is that once a stock price is within the outer bands, meaning between this band and this band, or within this band or this band, it's either overbought or oversold. And the intention is that it moves back to the mean of its range. So meaning that if a stock is up here and it's testing the outer band, it would eventually move back to the middle band, and then either lower or higher, but most of the price action would remain around the mean of the range. Well, in Home Depot and Marriott, I think there was even one other one. I don't remember. It might have even been Disney. Yeah, here, Disney. All right, so here, moved higher, moved sideways, touched the bottom of the range, okay, which contains price, and sure enough, look at what it led to. So what I'm looking at is, I'm not trading off of these or anything like that. I'm just looking at these types of setups, and I'm looking at Home Depot and how Home Depot also correlates with touching the range up here instead of pulling back, moving sideways, touching the range up down here, and breaking out. So the setup essentially means to me that this is very possible that this could continue and continue and continue and be $110, $115, $100, $120 stock, similar to what it did here. All right, it went from 46 to 80. All right, so maybe it's going to go from 70 to 150. I have no idea where it's going, but I just like how this linear regression channel really does define and assist with overbought, oversold. And as long as we can continue to find our setups similar to what we're doing here on a stock that is coming off of this bottom of this regression channel and not coming down from the top, then I think maybe we can actually get some better setups and see if we can get some longer runs, as opposed to something that's sitting at the top of the overbought category, and we're trying to take it long, thinking that maybe it's going to continue, but our upside is fairly limited. I mean, basically, if you look at this chart, there's only a few times that the stocks actually do trade outside of these ranges. So obviously it means something. So it's just something else I was looking at. Like I said, we'll try and maybe incorporate a little bit more, but for now we're going to continue to use and maybe what I'll do is I'll just leave it on the weekly chart like this instead of having the moving averages. Maybe I'll have the linear regression channel and it draws the channel for us, and we could see where we are in the range. Maybe that's the way to look at it, and just keep it on the weekly. But long story short, I like Home Depot. I think if we can get that breakout over 93.50, that could be a monster trend and lead to substantially higher prices. trying to remember. There was one that specifically stuck out in my head. Oh, here it was. UMP. So look at what UMP did. All right, before here, this would have been the setup. Okay, it came right back into oversold. Okay, so at this point on 10/28 of 2013, at some point through here, I'm sure maybe right in here, these three boxes at the end of the month, at the end of the year, I mean, maybe those set up similar to what these boxes were, and we could have caught the range. And you know, having some wind at our back on our stocks, and not just assuming that they're going to go up forever, and maybe the ones that are oversold but have good setups are the better ones to take. So again, just looking at it and just want to see how this relates into the trading. But it was something interesting I wanted to share with you guys. Anyway, I've gone on long enough. Really, at this point, we have to wait and see. We're not going to be taking any new positions tomorrow. There are a few that are setting up. CenturyLink is one of them. But again, not to get into this too much, but look at what we're doing. I'm saying, yes, okay, this is a nice looking trend going higher on the daily chart, but let's look at the weekly, 3-year weekly, and the linear regression. We're actually pushing highs. So my point is, if this really does contain price, and again, I'm not 100% sure how this is calculated, if this changes, when this changes, but if this is 100% of the time or 95% of the time containing price, and we're trying to go long here on a breakout over 41.31, is it really going to work? So again, it's just interesting to look at it. It's not, I don't think it's a bad thing to keep in mind, but maybe this is a better one that we would want to say, hey, you know what? If this broke down under 38.73, we want to short more than we want to go long this one. So just, something, food for thought, I guess. But I'm going to end it there because I can keep talking about this. I guess it's quite interesting to me. I hope you found it interesting as well. Have a great rest of the night, guys. You know the drill. Follow me, StockTwits, Twitter, Google+. Hit that like button. Subscribe to the YouTube channel. Subscribe to the Nightly Recap. We'll see you on Saturday for the weekend update. Take care, guys.